Hi, I'm Jubak, and welcome to my YouTube video for July 6th. Got a special announcement. Next week I'm going to be doing a live Q&A at 5 o'clock. Just tune into my YouTube channel, watch, and you can ask questions live, and I'll try to answer questions live. That's next Wednesday, July 13th, 5 p.m. on my YouTube channel. Live Q&A. Watch it. If you like today's video, give it a thumbs up. Subscribe to my YouTube channel. That way you get notification of things like live Q&As. If you want more of my stuff, you can go to my free site. That's jubakpicks.com, 3 portfolios. Or you can go to my paid site for even more. And it's got 6 portfolios, including some options and ETFs. And we'll be talking about some of that stuff today and in the next video. So you might want to subscribe. Today's video is strong dollar hits stocks, 3 things to do. Now, most of the time, you probably don't pay much attention to currency, the dollar and the euro and all that. They move, but not enough to make it really vital to your portfolio. Right now, however, what we're seeing is the dollar is a major driver in the stock market. For example, on July 5th, we had a big drop in commodities, oil and copper and natural gas and wheat and corn. All that fell, and it fell, one of the storylines was because of the recession, but no, it really fell because the strong dollar. When you have a stronger dollar, it means the price you have to pay for a barrel of oil or anything that trades on the international markets goes down, and therefore you had oil falling, 6% or so on nothing really about the recession, but mostly about currency moves. This is a currency chart from Bloomberg. For the DXY, which is a chart that tracks the dollar versus a basket of currencies of major trading partners. The DXY is up about 11.8% for the year to date. You can see that here. What's really interesting to me is that starting in late February, we got a huge acceleration in this. Most of the gain in the dollar in 2022 has really come in the last few months. This is just a chart for a ETF that tracks the US dollar, not a basket of currencies. And you can see the same kind of pattern, which we're chugging along here until late February, and then suddenly, whammo, we're up. What the driver is here is the Federal Reserve raising interest rates. As interest rates go up, the US dollar gets stronger against other currencies. Also, the U.S. economy is relatively safe in comparison to other economies around the world. Right now, the European Union is looking at not only a recession, but a really pretty dark recession because of its energy problems. The UK, the pound, is looking at a huge current accounts problem. So the pound, which was trading at $1.19 today. I remember when the pound was 176. The options market is saying there's a 1 in 35 chance, so a very small chance, that it'll break below $1.05. It's by September. It's never been that low. Same with the Eurozone and the Euro. The forecast is that the Euro will break parity with the dollar. That's €1 for $1. Sometime, not too far down the road. Right now, it's at a 20-year low. And it's only slightly over parity. So we're seeing this continue. I think this trend continues as long as the economies in these countries remain weak, and as long as the Fed keeps raising interest rates. I think we're going to see at least 1, 2, 3 more Fed rate increases. So this will be a time that you've still got a stronger dollar driving the market, and there's still good reason to do something. Okay, so what should you do? I said 3 things. One is, I don't think you ought to do this today, but you ought to look to sell oil stocks. We've had a pretty good run in oil, but it looks like we're seeing oil fall back. We broke below $100 a barrel. The one stock that I own that I would target for selling is ConocoPhillips, because they produce oil and not much natural gas. I'd much rather be in natural gas. I'd also hold on to my position in Pioneer Natural Resources, because the stock is paying about 5.5% dividend. Industrial metals like copper are getting hammered, again, because of the fear of recession, but also the rising dollar. So I think this is a good time to think about shorting a copper ETF. There's one that I'd recommend, United States Copper Index Fund, CPER. It's down about 24% for year to date. I think it's got further to fall. I looked to buy a put. That's the right to sell at a higher price. Right now for about $2.50. That gives you an option on 100 shares. Contract would be $250 for 100 shares. Pretty decent cost, pretty good downside protection in this market. So the third thing to do is to buy an actual dollar ETF. I showed you one, which is my recommendation, the Invesco DB US Dollar Index Fund, UUP. Adding that to a portfolio will give you some dollar protection in a market which is being very, very responsive in terms of going down when the dollar gets stronger. I think it's a good way to diversify. So if you like this video, please like it. Subscribe to my YouTube channel so you get notification of when we're doing the next ones. Remember, there's a Q&A, live Q&A next week, Wednesday at 5 o'clock. You can always get more of my stuff on my free site, that's jubakpicks.com, or more, 6 portfolios instead of just 3 on my paid site, and that's got some ETFs and options, so pretty appropriate for this moment. And that's my paid site, which is jubakam.com. Thanks very much for watching. Been Jim Jubak.